Welcome back to the Mortgage Marketing Update. I'm Brian DeMarie. I'm a loan originator with Union Home Mortgage and the DeMarie lending team. So let's talk about some rates. This chart right here is the 10-year Treasury. And as you can see, these numbers are really high. They're at a one-year high right now. And some economists are theorizing that if this is based on a lot of people thinking that the COVID financial crisis is coming to an end, and you're seeing their enthusiasm expressed in the 10-year. Now, I don't know either way, and I'm not going to sit here and tell you that these guys are right or wrong. All I'm doing is just giving you this information, showing you that these charts are up right now. And inversely, what happens is when the 10-year goes up, it pushes down our mortgage bonds. And what happens with that is the rates go up to compensate for the lesser value in this investment. And I can tell you rates have gone up in this last week. And what does that mean for us in real estate? That means that people that can only afford so much house can now only afford so much less. And rates are going to compensate for a little bit more of their debt to income ratio. And remember, buyers are only bringing so much income to their mortgage file, and we can only let them buy so much house based on that. And if a little bit more of that budget has to go to an increased rate, then we have to decrease the purchase price than they can afford. And with that, if you've been waiting to refinance your house, if you know if anybody else has, the time might be coming to an end when these rates are at these bargain basement prices, because with the mortgage-backed security basically in free fall for the last week, we don't know where this ends, and you may want to get on your horse and get running towards some sort of a refinance, because once these rates are gone, we don't know when they're going to come back. It could be years until we see rates as low as they are right now. So new construction is already pretty pricey, and last year, part of that is because lumber costs were up 100% year over year. Estimates are that they are going to go up an additional 35% this year. What does that mean to us as on the buy side? It means that depending on the regions that they're selling these houses in, especially in USDA areas and FHA areas where those are primarily the products that they're using, those have loan limits, and if we go, above those limits, all of a sudden we can't use USDA in certain areas anymore. And now we get pushed to FHA, and depending on the priciness of the house, we get pushed out of FHA as well. And so if we do see higher interest rates this year, I don't know if we will for sure. I can't make that guarantee. This could change the complexion of how a lot of mortgages are written in the new construction world. So something to be aware of for now. You super duper into LinkedIn. Have you checked out ProFinder on there? It's kind of like a freelancer connection tool. Some people think this is going to be their version of Fiverr or Upwork, ways to connect other freelancers to regular professionals. Is there a real estate button? There is. Now there might be an opportunity right now for real estate folks. There's tons of real estate people running around, but there's only 216 results in the Orlando market. A lot of them are commercial or investors or broker owners, and there's definitely a lot of white space for regular realtors just looking to do deals. You know anybody that needs a mortgage, or do you think that would benefit from our services? Lily and I would love to have a conversation with them. All you have to do is text over their name and number to us, or three-way text us introducing us to that client, and we will reach out today, get them pre-approved, and follow up with you. All of our videos are backed up on YouTube. Feel free to check those out. More classes coming in the future, virtually and in your offices. Check me out on Instagram. Talk to you tomorrow.